Peter Grandich is back. He is a founder of Peter Grandich & Co., and he was correct in calling for a bear market this year. In fact, many of his calls came to be true, and we'll be getting his outlook for 2023. This is one episode you probably don't want to miss. Welcome back, Peter.
Glad to be back with you, David. Honored to.
Honored to have you. I know it's a busy time of the year for you, so I'm very honored that you're able to spend some time with us today and talk about your outlook for 2023. But before we get to that, let's revisit some of your calls that you made in 2022. You were calling for the stock market to go into a bear market. You were calling for cryptocurrencies to collapse and crash, and most of them did. There were a lot of unforeseen markets in the cryptocurrencies markets. For example, the collapse of FTX, Celsius. But by and large, the market direction you called a year before, that was correct. Bonds didn't do well. So overall, just a really bad year. Can you pinpoint some reasons as to why the markets performed this poorly? I mean, you predicted the right direction, but there are a lot of things here that perhaps may have surprised you this year or not.
Well, for a lot of years, I wouldn't say I was a perma bear, but we certainly, for the years that I've been speaking with you and on Kitco, we talked about fundamentals that continue to get worse, the debt crisis, economy's out of control, no real movement of political will in Washington to do the things that need to be done. And I really called it the don't worry, be happy crowd, I called it on Wall Street. And then they were living off a very easy Fed, with plenty of money being supplied, and then the government printing money, especially when the pandemic happened. And that created that excess, and it gave them, some people called it was right, a sense of Kool-Aid. And then, of course, when the Fed eventually seen how much it missed regarding inflation, we've now seen the results of that. All those problems, David, haven't gone away. In fact, many of them gotten acute. In fact, I'll tell you one that I was shocked to actually hear Washington speak of and not get the kickback it normally does. And that is the talk now of having to restructure our Social Security system. We used to call that touching the third rail. No politician wanted to talk about something like that. And I think that and a retirement issue with so few people having the amount of dollars able to retire, it still, to me, makes 2023 still maybe not as down as much or as sharp, but I can't see it possibly being a positive year. In fact, I'll go far to say that I don't think we'll ever make a new high in my lifetime. Now, I could die in 2 months and get away with that call, but I really think it's going to be very difficult for several years for the stock market to have double-digit gains.
Well, we know you'll be around for many more decades to come to give us more of your outlook. So that may be a very bold statement considering how long you're going to live, Peter. But all right. Let's talk about your calls for why. Well, let's revisit that. Okay, so let's just talk about that first before we get into the other topics. So we're not going to make another high for several more years. I've heard that before. If you take a look at just the NASDAQ, for example, 2001, we had a big bust, didn't recover until the middle of the decade, a decade later, more than a decade later, actually. So the similarities between now and 2001, what are they?
I don't think I was going to tell you that, listen, there was a period in one time where the Dow didn't make up for its loss for 27 years. I don't think it's going to be that long, but I do think it's going to be challenging because of the constraints that we have on the economics. Listen, we're getting to the point now where it's really, really, really serious and no one's really talking about it in Washington, that we may start having trouble to pay our interest on our national debt. We're talking about we're going to be pushing towards 33 trillion in debt. If you take a 5% interest rate on that, that's 1.6 trillion in interest alone. So that alone, but I think the other issue is the inability to have any political coordination in Washington to do the things that need to be done, to make the tough decisions. It's always kick the can down the road, which, like I said, surprised me that the can has finally stopped being kicked on regarding Social Security. And that could become a hot button issue as we get towards the 2024 election.
Why? Sorry, can you just explain why is Social Security all of a sudden a big hot topic right now?
Well, because so many people depend on it, David. Still, I forget the percentage, but it's the majority of Americans that are retired. Social Security still makes up a significant part, if not all of their dollars in retirement. And so any talk of reducing payouts, also raising the taxes on it, and even well, clearly they'll have to extend the period of time before you collect it, which was 65. And people never knew why the number 65 was chosen. When they first created Social Security, the average person was only living to the age of 62. So they figured they never would have to pay out that money. But now we have people living well into their 80s and all, and we have people that are collecting 3, 4, 5 times more than they put in the system. So that's going to be an important hot but issue locally. And then geopolitically, China. China is going to be the next big talk topic for a variety of reasons, both militarily and economically.
I want to talk about that in just a minute, come back to China and geopolitics, but just on demographics in the U.S. now, the United Nations projects that by 2050, Japan, their population will have a 1-to-1 ratio of working people to dependents, meaning for every person working, there's going to be one person under the age of 15 and or over the age of 65, which means obviously they're going to be very much burdened in terms of Social Security themselves. Is America heading in that direction, Peter?
Yeah, we are. I forget what it is. It's like 1.3 or 1. It's a low number now compared to when it used to be 15 people working for one when Social Security 20, 30, 40 years ago. Yeah, so and that's not limited just to Japan and the United States. This is a problem for the Western civilization of an aging population.
What should be done then? Some politicians on the left have proposed UBI, Universal Basic Income. Is that a solution?
I don't know. I don't know what the solution is. I just know this. Think about the people now that are paying in that are only in their 20s, 30s, and 40s. They're likely not to see any or a lot of what they're paying in. And where do you draw the line? Where does it stop? Well, it's going to stop based on what political influence, what age groups are having on politicians. And so unless the younger people of America start to speak up a lot, the older people are going to fight. They're not going to want to see a cut. They'd rather have taxes go up and let somebody that's still working pay for them.
Okay. And for investors then, does that mean that we should be, I don't know, investing in sectors that would benefit pensioners or perhaps sectors that would benefit the younger people? What does this translate to in terms of investments?
One of the things that I would say, and I'm not a housing expert, but I don't think that the day of 5,000 and 6,000 square foot homes is now behind us. I think homes are going to get smaller because we're going to have an older population. They don't need the big homes. So that's the first thing. The second thing is the availability to get a home. The price structure for young people now to own a home is very, very difficult. So we're seeing more money shift over to rentals and multifamily buildings and things of that nature. So that's one play. And of course, the health end. The longer you live, the more health needs you're going to have. And that's industries. I don't specialize in that, but in a generalization, that's probably an area which is going to see still growth.
Not just are people getting older, but people are having fewer children as well. The average marriage age of developing countries has steadily been rising over the age of marriage, rather, has been steadily rising over the past few decades. The average age at which women are giving birth, that's also been rising steadily. And of course, the number of children that a family is having, that's getting smaller as well. What does that mean for the future of our society?
Well, population-wise, it wasn't too long ago, just a couple of decades probably when I started almost 40 years ago, the fear was there were going to be too many people in the world, that we were going to strip our resources and we wouldn't be able to supply it. So in one instance, I guess that's actually a positive versus how it was looked at. Of course, the climate control is still that number one issue. And that has, you're either on the hard left or hard right of that side. You're not in the middle. And either you believe it or you don't believe it. And but governments are still moving towards things that supposedly benefit the climate. And that's why electrical cars and things of that nature are still being pushed very, very heavy. And that plays a role into, okay, if you're going to do that, where do we have the mineral supply in order to provide those items? And that's a big thing that the United States lacks at this point in time.
that leads to our discussion about miners, right? The miners play a critical role in this transition between a petrol car society to an electric car society and everything else between. Everything is being electrified these days. Which of these metals do you think, before we talk about the miners themselves, which of the metals do you think are best positioned to profit from this transition?
Well, that's all. We fall in the base metals. It's not going to be so much gold, even though silver is used quite a bit industrial wise now. But I think copper, lithium, those type of things. The copper supply now is down to the lowest level since they've been tracking it. And interesting things wasn't talked about much because it was towards the end of the year. But in Panama, they shut a big copper mine down, which the investors spent over 10 billion on. I think the big concern for miners is going to be, can you go to certain places of the world that you might have gone before and not fear either political takeover, taxation, regime changes, and suddenly you're not in favor? So I think miners have shrunk the areas of the places that they would work. I like to say that you could have spun a globe 30 years ago, point your finger, and people wouldn't have a problem going there. Now they would. And that's going to take us back to North America. Still in North America, most of your provinces and most of our states, some are difficult to mine, but there's still needs and wants to look for minerals. But my favorite is copper because of the real supply and demand scenario that's shaping up for the next 10 to 20 years, past that what I'll probably see, but certainly someone younger than that. And there, I think more concentration is going to be in areas of the world where miners are not going to have to worry about the things that I just spoke about.
I was having this discussion with another gentleman earlier this week, and I asked him whether or not lithium is going to be the new crude oil. Because when you think about it, suppose in the distant future, where most people are driving electric cars, we don't need to go to the gas station to fill up the gas tank anymore. But we do need lithium to power the batteries, or to construct the batteries needed to power the cars, right?
Yeah, that's interesting. I'm in the personal camp that we're not going to get all the way that everybody thinks, because people are realizing the real heavy cost and some of the downside of this switch. And I don't think fossil fuel is dead. I think it's still going to be around for a few decades, maybe not as much as it was 50 years ago. But you're right on the lithium. But copper, that's my favorite base metal. There's a lot of bullish reasons for that.
Yes.
And I think even you can digress into things like zinc and most people have to realize there hasn't been a lot of money spent on worldwide exploration for metals in a while. We've had three pretty bear markets: the 2015, 16, and of course last year, which absolutely was annihilated, including yours truly, the junior market. We haven't had the great expansions and great discoveries that we used to have 20 or 30 years ago. And these things aren't built in a year or two. It takes 10, 15 years sometimes. So these are a lot of issues that I think are important, maybe not for just tomorrow, but looking out many years.
That is a good point, and that's a good segue to talk about China. You were mentioning China earlier. Now, China is the world's #1 consumer of copper, so what happens there has a big impact on the copper sector, base metals overall, actually. They're a big producer and consumer. But to your point about China and geopolitical risks, what's going on there? What do we need to know, Peter?
Well, obviously the government has had its first taste of true rebellion. I mean, it was very, very unusual and unexpected. People that followed China every day were taken back. And I think that's more to come. I think the younger people, we even see it in Tehran and Iran, that the young people, the women won't even wear their scarves. So these type of governments that existed are going to have more difficulty keeping control. Now, one of the things I think China has going for it is it was able to kind of switch its economy to just not being an exporter, but internally growth from internal sales. But they take this issue about Taiwan very serious. To them and their culture and their beliefs and all, it really is a thorn in their back. Now, are they willing to risk a war over that? I can't answer that, but they certainly are causing provocations that accidentally can lead to that. And we're seeing that become more intense. And of course, if Taiwan is for somehow taken down, like a Ukraine where it can't produce and there's a long drawn out war, we have the big problem of semiconductors, because that's really the home of semiconductors, and semiconductors move our technology industry. So I think there's a lot of reasons to watch China. I do think that they have been one of the big acquirers of gold. We've seen a tremendous amount of physical bullion. We've seen central banks buying gold in record amounts. I think that's all in preparation for an eventual different world reserve currency, or at least an alternative that will have some sort of commodities backing that would include gold. And I suspect, if I'm right about that, that China is going to be the leader in that. And it may be with all the BRIC nations or just some of them, but I think China will lead with that.
Yeah, just to your point about semiconductors, a lot of people, this is an important point you brought up. The Taiwan Semiconductor Manufacturing Company is one of the largest companies in the world, multinationals, and they have a monopoly on advanced semiconductors under a certain nanometer of width. I can't remember what it is, but only they're able to produce it to that level of precision. And so if the Chinese were to take over the island, they would have basically entire control over the global supply chain of semiconductors, which means everything from your phones to your computers to cars to missiles would be under Chinese control. So do you think that's something the U.S. government is considering when they're analyzing this from a geopolitical standpoint?
You hope they are, and you hope part of the Western world is considering that. I think one of the reasons that gives them a little feeling that they might be able to do it is they look at the United States much weaker now than it was 10 or 20 years ago. And I'm not getting into anything about Biden and relations with China at all. Just the simple fact of how we've been on the world scale, how we left Afghanistan and all. The Chinese now have equal our Navy, something that 10 years ago wasn't even close. And there's an old saying among war veterans: those who control the sea control the world economy. So there's a lot of reasons to be concerned, and we should be, and I'm certain there is, a lot of planning of what ifs China does such a thing as invade Taiwan.
I'm just going to slightly push back on that, Peter. There's been a lot of talk about Chinese military power rising, and you're absolutely right. But how much of that is just U.S. propaganda that the Chinese are catching up militarily? I've talked to some people that said that the U.S. is still decades ahead. They might have, in terms of quantity, they have a lot of boats, but in terms of quality, there's still no match for the U.S. Navy, right? What do you think?
Again, not being an expert and really gleaming from what experts have said, one thing is for certain: they are much stronger now than they were 10 or 20 years ago. Okay. And if we continue to grow at that rate, and they continue to be able to take our technology in certain ways, of legally and otherwise, and turn it into, we just saw the craziest thing, if I may just digress for a moment. Many people might not know it, but Biden just approved the Chinese to acquire a farmland 12 miles from one of our biggest Air Force bases up in North Dakota. Now, a lot of people go, well, what does that mean for me today? If you think about it, China, which potentially is an enemy, will have not only farming for themselves. This isn't stuff that they're going to sell here in the U.S. This is going to be stuff that's shipped back to China. But they're going to be within 12 miles of a key Air Force base. The logic of approving that, to me, is illogical. But I think there's a lot more issues out there, and we never find out these things until there's a problem, and then we hear about all these things. No one wanted to believe a lot of things that Twitter was doing. There were people online talking about it, but no one can prove it. But now, since Musk took it over, a lot of things that people felt was saying at the time was happening was indeed happening. So that's why I know there's this whole thing about fake news and people put out news for this and all. But the very fact is, China is a formidable opponent. They're not Russia. And they're certainly financially much better off than Russia was. And I think it's just something we have to watch from a geopolitical concern. And one thing, David, geopolitics was not being taken into what you should do in the stock market until recently. For a decade, it played almost no role in anybody's decision making. Now, because of what's transpired and how it impacts oil, and then the shortages we've seen around the world and so forth and so on, now people are paying importance to geopolitics.
Just two more questions on China, and then we'll close off on your market outlook for the year. You mentioned that China might spearhead a new global reserve currency that's backed by commodities. I've heard this theory before as well. What is their incentive for doing this?
Well, many people feel without us being the world reserve currency, our economy would absolutely crumble. We get away a lot because of where the world reserve currency and the dollar. Two, it's just an economic power change. Listen, history has shown certain countries, sometimes for decades, sometimes for hundreds of years, are the number one economic power, and then it changes. And if it is going to change, and if China is going to surpass the US, and that's up to debate, then you would want this, they would want to see a currency that they have control over, not somebody else's.
Yeah, that makes sense. And finally, the point about China's economic rise, I don't think they're going to stop. Military rise, debatable, but they are rising on the world stage. History has shown that when emerging superpower challenges an existing superpower, in the past there has been war. I'm not saying that there will be. I'm asking you what needs to be done to avoid a real conflict between two superpowers.
Well, some would argue that the fuse has already been lit, that it's only a question of when, not if, that some sort of conflict has to happen. I think a lot of that will have to do with how we stand militarily and as a nation, united or not, over the next few years. There's been a lot of breakup in America. You're either hard left or hard right. The unified Americans still, when things are bad, we rally. But on the world stage, we don't have the friends and allies, deservingly or not, that we had 30, 40, 50 years ago. And that plays a big role in when or if there's ever a conflict. And what I'm really afraid of, David, and since you've asked this question, is the war is not going to be simply men on a field somewhere. What we're seeing now, even in the Ukraine, where high technology now is being used, the technology end of what war may look like is going to be totally different than what those of us that grew up through the Vietnam War or even the older people that remember the Korean War and all. The type of war that would be fought now is not going to be the type of war that our parents fought in.
That is true. All right. Well, let's hope that World War III doesn't come anytime soon. And you know what Einstein said about World War III? He said, I know not which weapons will be fought in World War III, but I know we're in World War IV, sticks and stones. So let's hope that never happens. All right. Well, let's talk about. I want to ask you this. Suppose a young person in America were to grow up, go to college, and then he needs to move somewhere. He can either stay in the U.S. or move to any country in the world. Now, which place of residence would you recommend that young person to be in for him or her to have the best potential? Earning potential or career potential or happiness potential, whatever you want to, however you want to define success for the rest of his or her life. Is it still the U.S.?
Well, I'm an old red, white, and blue guy. You know, I grew up in that age, and so I still see America despite all the difficulties and so forth and so on. But I am certain that if there's a certain type of skill that they have, or trade, or a lifestyle, or a culture, one of the big changes in America, and this is an underlining theme that won't be discussed on Wall Street, but I'm going to bring it up here with you, and that is the movement away from faith. America, 2 generations ago, lived off a Judeo-Christian way. Now more people now don't even believe in a creator or authority. We've become very secular. And with that secular, some socialism has come in, and we continue to move that way. That, for someone that's looking out 20, 30 years, has to play a role because you think in a different mindset. If you don't believe in heaven or anything, or there's no afterlife, then you're not so worried about that your so-called soul's not going to go someplace, and you act differently. That's just a fact of life. And I see that even in my industry. And so I think that's an issue that won't be discussed. But again, if you want to talk long term, that's part of the demographics that you spoke about that are changing in the world. And that's just not in the United States, it's worldwide.
Well, since you brought it up, I am curious as to what the relationship between faith and business practice is. Can you just explain in less than 2 hours? I know this is a big topic.
Well, for someone who has been a sinner and who has written about it and stated it, and Wall Street can bring out a sinner faster than just about any other industry. Wherever there's money, it's more tempting money than just about anything else. Part of the difference now is that the morale or morals have changed dramatically. Things we would have never imagined that if I turned on the TV or I turned on the computer, that I would be able to see and be mainstream. Now it's mainstream. And that in itself changes again how people are willing to act. And so the so-called moral faithful person who's a sinner as well, not just because you're a faithful person doesn't mean you're not a sinner. They reflect on that as the economy and things are getting worse. And that's what you hear from people of faith in the United States, that the United States is going downhill, not just economically, socially, politically, but spiritually.
Mm-hmm. Okay. And you're seeing this in politics as well, or not?
I don't know if there was ever any religion in politics, no matter what side you were on, David. But I can tell you this. We just had 2 years of where the Democrats had complete control and they did a lot of bickering and they had a splinter. And then if you would ask me the night before our recent election, it looked like the Republicans were going to sweep and things were going to change. And now the Republicans are in disarray, even trying to get a speaker. And I think we're going to spend too much time, even though we should be looking at what caused COVID and what did Fauci know. We should be looking at Biden and his son and all. But I think those things are going to come more important than some of the. If you talk to I deal with mostly local small to mid-sized businesses, and they will tell you if they've been in the business 20, 30, 40 years, they haven't seen good economic policy for small businesses come out of Washington in almost 2 decades. It's become so difficult to be a small business owner in America. So all those things, they may not affect what the Dow Jones does tomorrow, but if you're thinking 5, 10 years out or further, all the things we just discussed need to play a role. And I don't think most financial advisors are equipped to even to have the depth of knowledge of that because they're living on the surface too.
Well, what you're describing relates to investments quite directly. Let's talk about the elections. I'm not going to ask you for a prediction, but I will ask you what the average American person wants in terms of change for his country.
Well, I think economics has come home to roost. The unbelievable increase. Inflation is a lot higher than that's reporting. I mean, we're watching food prices, things you can never imagine that you would pay for a dozen eggs or things of that nature. So I think economics and cost of living and those things versus, hey, should we worry about a war or someplace 5,000 miles away from us? I think it's going to be more difficult for the next generation to see government support wars that somehow don't directly or confrontations impact us, our home, our base, and that is our living standard. And we've seen a small amount of people, a very small group, go forward these last few years, but the vast majority of Americans have gone sideways or down, and it's becoming more difficult for them. All you have to do, David, is talk to anybody that runs a food bank anywhere in the United States, and they'll tell you how many more people now and working people are showing up at food banks. So these are all issues that, I'm not going to make you decide what stock you're going to play tomorrow, but these are issues that are going to play a role in how the world goes in coming years.
And I asked you the question about where the younger person should move, because where I was going with that is if you're aligned in terms of your investments and the future of a country, would you think that that country that the young person should move to or stay in is also the country that you should invest in? In other words, if a young person has future in that particular country, does it not make sense that that country should be a superior form or place for investments?
You're right on that, and you also bring in another point that's changed. 10 or 15 years ago, one of the biggest marketing things in Wall Street was globalization. And you should own these companies because we've gone global. Globalization is done with. You're going to look for countries to pull in and focus on themselves. They realized issues in Europe and things of that nature. So that person has to take that into account. What country is going to be best suited to provide these things in order for he or she to make a living, as you say, in whatever their skill may be.
Well, I'm curious as to why you think America is still, I don't want to call it a safe haven, but a good place to invest in, considering the problems we've discussed. I mean, we've talked about the loss of faith. We've talked about the divide in the political aisles that's weakening our unity. We're talking about America losing its competitiveness in the world stage. We're talking about the economy going south. A lot of issues, Peter. What makes America still competitive despite all these issues?
I think for most people, unless they really dig in deep and spend hours and hours and computers driven, I think people are going to view us still as the lesser of two evils. It's not that we're phenomenal anymore, but versus where else you could go, you kind of by default stay here. That certainly is my choice. But again, I'm not 27, so I don't see 40 years, 50 years in front of me. If you do, the United States is going to have a struggle to move forward over the next several years because of how it left itself economically and socially, and that involves the politics as well.
So we've talked about the distant future. Let's talk about the near-term future. You've given a very accurate forecast for 2022, so thank you for that. Let's talk about 2023. The main issues of the economy that investors need to be paying attention to just for this year, Peter, just for this year, and then we'll get your outlook.
Well, there's no question the economy has to continue to weaken. We've seen inflation is never, in the early stages, inflation is good, but in the latter stages, it's not. We cannot see easy money. See, people are talking about this pivot as if the Fed one day is going to take its foot off on the brake and press down on the gas pedal all the way down to the ground. At best, for the foreseeable future, which could be several months minimally, they may ease their foot off the brake pedal. But to go to the gas pedal and think that they're going to start providing lots of easy and plenty dollars into the market, I think is the wrong judgment. And these are all guesses. No one knows. All I can do after 40 years is make an educated guess. With that in mind, and with the political, it's just amazing that they can't even agree on the simplest things. We're just going to continue seeing bills being passed, more money being created, and the debt load going higher, and more people falling than rising. And one of the things, and I don't get into all the Civil War and all this stuff and you got to have gold because you're going to get a loaf of bread. But what we are seeing is we're seeing a split among people. And you talked about Democrats before, and I thought you were going to go to this angle. There is a growing sector in young people, some places around the world, that feel, a person at 80 or 85, why should I pay for a heart transplant for them that's going to cost X amount of dollars? They lived a long life. Put them like you put a dog down, put them to sleep. Listen, that's real. That is happening. We have states now in America where if you decide you want to take your own life, you can and all. So there are a lot of issues. There's not many positives to expect the Dow to rise. We can't get PE expansion. We're not going to see dramatically lower interest rates. We still have stock buybacks by companies. Now that's helped the market along and continues to do. But again, most people pulling in. And here's one thing that's very important. You can get away with in the retail brokerage industry, talking to the individual investors or small institutions. Hey, hold on, the market always comes back. We had a bad year. Don't worry. 2 years in a row like that, those people won't be able to take it. And so if the market doesn't start to turn, or worse yet, it goes a lot lower. I think eventually the pandemic lows have to be reached before it become worthwhile for me, before I would want to re-enter the U.S. market. But we have competition now. People are no longer it's the only game in town. And the destruction that we saw in the cryptocurrency world, which I'm not happy for, even though how much we used to do a show on your comment list, this guy should die, he's an old man, blah, 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 blah. But the damage that was done in there, widespread, and especially among the young, is we still haven't seen the bottom of that. So I just find it hard to think that the stock market can make huge gains, certainly in the first half of the year and possibly for the whole year.
Okay, so more downside before we recover. Which sector do you think is going to rise from the ashes to outperform the others eventually when it does come?
Well, gold and silver are acting very, very well. We just talked about gold being accumulated by the central bankers. That's very bullish. The fact that it was able to hold its own during last year suggested that any easing off that pedal is going to see gold go higher. Personally, I think we'll make a new high in it. But where the real opportunity now is in mining shares. Mining shares relative to gold itself haven't been this cheap in I don't know how many, maybe a few decades, even to the S&P 500. And on the top of the food chain, the major producers, they became free cash flow cows. 10, 15 years ago, they were debt laden in something like this. Now they're in a position to use and I use the word annihilation that happened in the junior market, and to some extent in the mid-sized producers, to go out there and make a lot of acquisitions. But they're going to be very concerned where those people are for the issues that we just spoke of. But even down on the junior end, where I lost a lot of money. Now, I don't know if people come on and actually note that they lost money as guests, but Dave, I'll be one of them. But there's opportunity in the junior market now. There's going to be mergers out of necessity, and there's also going to be mergers and acquisitions out of things becoming very cheap. For example, in your province, Quebec, there is a whole host of companies that I could think of that are merger candidates, takeover candidates, et cetera. I'll just throw you out some names. Yes. Amex Exploration, Radisson Mining, Northern Superior Resources, who's already been kind of on an M&A track. But there were companies, if I may just tell you about one, and you've got to remember, adversity always creates opportunity. Take a company, just as an example, not telling people to run out and buy the stock, American Pacific Mining. They were able to go out and make an acquisition during this terrible bear market that let them now become part of a soon-to-be producing mine in Alaska. And between both of their joint venture partners, one with Rio Tinto and one with the largest private Japanese smelter, they're going to spend $40 million exploring on those properties. They only have a 60-something million market cap. So there are a lot of things. One other one, again, I just put it on the blog today, just as a name. I'm not telling people to go out and buy the stock. Big Ridge Gold. It has a property in Labrador where new resources coming out. There's 1 million ounces there already. And there's 600,000 ounces of a property in Quebec. It's got an $8 million market cap. I mean, these are things that maybe don't turn tomorrow, but clearly, the bottom is in on gold. The bottom is in on the mining shares, and look for a lot of M&A this year in the mining share sector.
Okay. Peter, that was a wonderful discussion. I want to end on this note. You've had decades on Wall Street. You've learned what to do, what not to do. For the younger investors watching out there who are planning to get into the markets this year, let's suppose they are, your advice for them?
Well, don't make the mistake that I made for a good part of my life. Don't make money your God. As good as it's important to invest and invest correctly, there are more important things in life, family, a lot of things that they need to focus on. Maybe the world isn't focusing on there. But in terms of where to go in the market, just remember, debt is usually not a good thing. Sometimes you need it. It's useful. That's how you get a mortgage and things of nature. But if you can't afford it, think of maybe for a younger person, great grandpa who never had a credit card and managed to live okay. And I think one of the things hopefully they'll learn is not to get overextended. I think that's what happened here, that a lot of younger folks got caught up in the crypto market and the stock market, and they've been set back. I mean, really set back hard. So hopefully that young person is more conservative in their investment themes than perhaps this generation was in recent years.
We hear about not taking on too much debt, on a personal finance front, and perhaps not taking on too much leverage on a trading front, but let's just focus on the debt. Why is that a bad thing? What are the immediate risks of taking on too much debt?
Well, I'll give you a secular and I'll give you a spiritual answer. The secular
Okay.
is it can just become overwhelming, that it becomes too hard to service. Spiritually, for those that believe the Bible is something more than just a book, it is one of the most talked about topics, and there's not a verse in the Bible that expresses positively about that. It usually leads to issues. So, all in all, for me, it's been a four-letter word, to not be part of. Now, a lot of people don't want to hear that because society has really lived off of debt. We watch commercials where, wow, you get 5% back if you use this credit card. And meanwhile, you're forgetting about the 95% that you spent on something that you might not need.
Yeah.
But excuse me, that's the issue. Less is more. If I'm never to appear again anywhere, let the last thing that I said be on your show, David, and that this 3 words is the most important thing from my life that I learned. Less is more. Some of the happiest people, the world would want you to think that the guy that owns the bus company is happier than the guy driving the bus. But some of the happiest people I met have little or no means, and some of the most unhappy people I met are people of real wealth.
That's actually a very important message. So I want to talk about that. How do you know those people with less are happy? And how do you know those people with more are unhappy?
Well, you can just see that even though they have little or no means, they're not having crises. That, think about it. If you have so much money that the world says is good, why do you have so many issues of broken families, children who are just abandoned, addiction? I mean, we can get into a whole nother subject, which I don't think Kitco specializes in.
Mm-hmm.
But I think it is important to understand that many times also those people with little or no means have some sort of faith, not just Christian, but a faith that they follow. And so that faith to them becomes more important than a dollar.
What if someone has a purpose in life, which is to make a lot of money? Now, he might say to himself that he's becoming rich not because he necessarily loves money, but because that's just his goal. I mean, we can't rob a man of his purpose in life now, can we?
No, not at all. That is his goal. But from the spiritual side, and if it happens to be from the Christian, the creator that people believe was the creator felt it'd be very difficult to have a lot of money and also live a life of faith. It becomes more challenging than it is. And of course, they believe that their savior came for the people of lesser means, not for the wealthy, and so forth and so on. But there's nothing wrong with wanting to seek to make money. But I think if that becomes only your issue, which in part of my life it was, I've written about it in my book and all, I think you get unaware or not focus on other things. And before you know it, all the money in the world doesn't fix a health issue. It doesn't fix a problem that a child has, that you had, that while you were making all your money, didn't get the loving and caring it needed and all. So there's a lot of social aspects to that, David. And that's why I think less is more is a good theme to have.
When I was younger, my mother told me that the best investment that I could make is in education. Do you agree or disagree?
Absolutely. But unfortunately, we allowed the people who educate us to charge exorbitant amounts. And that's why we have a student loan problem. But you're right. Education certainly is a good thing to have. It's a necessity. But there's areas in the world where it's very hard for people to get a good education. And they learn to survive on faith, and they learn to survive on less. And less is more is a good attitude. In our financial planning, that's what we try to teach people. A lot of people don't want to hear that, but those that did, especially these last couple of years, are glad they did. And and they're now in a position that others who thought more was good are not in.
If you had a lot of money, I'm not saying you don't, but let's say you were Elon Musk, if you were the richest man in the world, what would you do with that money? What legacy would you leave to the world?
Well, I would never get to that level, but if I had that suddenly tomorrow, I would try to spend as much money on teaching some of the things we discussed here. But I'll give him credit about one thing. His takeover of Twitter and what has been shown, what has been going on and tied to technology has really upended that part of the world that likes to keep those things to themselves. So from a benefit from being one of the richest men, even though he's lost a lot based on the Tesla stock coming down, that has been a benefit. But for me, there's no reason that people should go hungry. There should be ways that we can find simplest ways. Maybe not that they're eating steak every night, but here, even in the United States, you can be in a neighborhood where there's a $10 million home, and within walking distance, there's someone waiting on a food bank line. So I think proportionally in that regard, and that's was always the argument for socialism and spread it. But I just think if I was the richest person in the world, I'd try to make people have a little bit more necessities and get away from a lot of the luxuries.
Okay. All right. Well, certainly a lot to digest. Thank you for your time. Happy New Year. I wish you the best of luck this year with your investments, with your portfolio, with your health. And I look forward to speaking with you again soon. I just want to thank you for being on Kitco over the last 2 years. On a personal note, you were one of my first interviews, Peter. I don't know if you know this, but when I first started this gig at this desk, it wasn't even at this desk. It was at home in my apartment way back during COVID when we were all locked down. And you were one of my first interviews. I didn't have any experience. I didn't have a name. You gave me a chance, and I just want to thank you for being here.
Well, let me just say in fairness and my hand on the Bible that you have grown tremendously in those 2 years. I think you have a much brighter future than you had when you first got behind that desk. And wherever or whatever you may do at Kitco or elsewhere, may God bless you. And I feel honored that I was one of the first and that I'm still here able to speak to you.
Thank you very much. Thank you. Well, we'll look forward to speaking with you again soon. And thank you for watching our show. I'm David Lin. Stay tuned for more. And don't forget to subscribe to our YouTube channel.